What a wild week last week in the stock market. We got seemingly 3 different job numbers. We had JOLTS report, surprise to the upside, 600,000. We had ADP, surprise to the downside, 89 on a 150 expectation. And then, of course, the most talked about number on Friday, Economic Bureau, over 300,000, sent the market all over the place. But then people started actually looking at the devils and the detail. And you know what? Maybe that jobs number, not so great. And oh, by the way, folks, don't buckle up. We got CPI and PPI next week. So what we got going on, Mr. Bird? Last week was nuts.
It was fun week.
Fun week.
It was fun.
That's awesome.
I started buying on Friday.
Oh, you did? Friday morning?
No, Friday afternoon.
Okay. All right. Started nibbling. I like it.
We'll talk about that in the next session.
Okay.
Session 2, we'll talk about whether we're on the verge of the year-end rally.
Are we on the verge of a year-end rally, like Tom Lee says? Or are we going to crash, like Jeremy Grantham says? That will be topic number 2. But first, what happened last week? What is set up for next week? It's got a
Let's look at something. We got a lot to talk about. You have to let me share.
I just did. Sorry.
There we go. Okay, so first let's start with this. If anyone's interested in getting my newsletter, just log into breakpointtrading.net. I no longer require that you register for it.
Oh, nice. Okay.
They can just click on the box in the upper right without a password and get the newsletter. So
that's a nice help.
Very, very simple and easy. Now, the downside to that is I will be starting to send reminder emails each week to folks that are registered on the website.
Okay.
So that this is not my distribution list that I had before.
Right. This
is the website. That's why I've been asking the last 4 weeks for people to let me know if they still want it. So they've been sending me just type in yes. If you get my email over the weekend, just type in yes and I'll add you. But from this point forward, it's going to come from the website. I'll send a reminder out, but there's no registration required or password required for the newsletter.
Awesome.
There is for the other content, which is a lot. Totally I'm adding all the time to it. But the newsletter, you just click on the box and you can get it.
Perfect.
So these are 2 of the cartoons from this week. Is the bear poking his head back up again? I mean, the bull is a bull poking his head.
Yeah.
We're gonna find out.
There we go. All right.
This little blurb right here. I want folks to keep this in mind. I'm going to talk about this here in a minute or 2, and even in the second session. This is from Stock Traders Almanac. They have a criteria for the seasonal MACD buy signal. So this is the signal for the end of year rally. And this is the criteria that they need in order for them to start tracking this buy signal. So number 1, it has to be October. Okay. So we have to already be in October or the first trading day of October.
Right.
The next thing is there needs to be a MACD buy signal on the Dow, the S&P, and the NASDAQ, and all 3 indexes must agree, meaning there has to be a signal on all 3. Okay. So keep that in mind. I'm going to show you that here in a second, what that means and how you can easily get to it from the front page of my website with no registration needed. So let's look at last week's calendar. This actually is next week's calendar. So next week, PPI is on Wednesday. A lot of times PPI comes after CPI, but this month it's before CPI.
Yeah, I saw that too. Yep.
So we'll look at the big drop 0.7 to 0.4. And then CPI on Thursday, a small drop, 3.7 to 3.6. I think it might be a little bit more than that.
Yeah, it's going to be based on oil because shelter's clearly rolling over. Oil came down a bunch, but I think it may have come down pretty late.
Yes, it did. It didn't come. It won't show up until the next one.
Yeah.
Next CPI, actually. So this might be accurate. It might come down maybe 3.5, but I think it will come down a little bit.
Yeah.
But yeah, oil has been falling off a cliff. So let's take a look at this is my this is my website, by the way.
Mhm.
So back to that reference on the MACD buy signal. What I did, and this homepage here, you don't need to register or anything. You just go to this homepage. You can click on it, click anything on the homepage. The newsletter's right up here in the upper right. So just click on that, and the PDF's right there. Don't have to put a password in or anything. So here's first of all, the Investors Business Daily changed their market outlook on Friday. Actually, it was late Friday. Didn't even show up until Saturday, actually.
Wow.
So this was a huge reversal. This went from a market in a confirmed downtrend, which is a red down arrow.
Right.
There's a middle part where it says market is, trending sideways. It becomes an orange arrow. It went all the way from a red down arrow to a green up arrow.
That doesn't happen very often, I'm guessing.
It does not happen very often.
Hmm.
And these are the numbers from last week. You can see non-farm payrolls, 336,000. I'll show you a few things on this here in a second.
Yeah, that number was kind of dirty.
Well, the number was accurate, but the things underneath the number,
that's what I mean,
were a little bit. It's actually
the headline was scary, but once you got into the data, it's like, you know what? That's not as scary as it first looked.
Yeah, so let's do that. Let's look at that. So this is from BLS, Bureau of Labor Statistics.
Mm-hmm.
This is a 1 month change. This is non-farm payrolls. This is a monthly change. See, it was trending down, then it spiked up. This only goes out till, I think, it's October 8th.
Yeah.
So it looks like it's spiking up. And then if you look at the annualized view, it's trending down.
Right.
But not below zero. Slowly trending down. But we get that little spike on Friday. So here's the one that's interesting.
Yeah, this is why I think Jerome Powell was smiling Friday.
Yeah,
he doesn't.
That's right.
People like to say that Jerome Powell wants to create job losses. I completely disagree.
Yeah, I disagree. I disagree with that too. I wish he would say something to.
He likes to be the big bad wolf. He doesn't mind being seen as the big bad wolf. He cares about inflation, and under the guise of employment, that's earnings and wage inflation. So that's what he's watching.
I'm going to highlight this blue one. That's real hourly earnings.
Yep.
So yeah, the jobs number went up. And by the way, the unemployment rate stayed steady.
Yep.
So remember, that's one of my inflation watch criteria.
Yeah, it is.
It went up from the month before, but it hasn't really spiked.
No, 3.5 to 3.8. Yeah, it stayed steady.
3.5 to 3.8 and then 3.8 again.
Yep, correct.
So this is the one right here, why the market started to rally on Friday.
Mm-hmm.
Because even though the headline number itself looked kind of scary, actually it was good. It's great. In most cases, it's good news is good news, right?
Yeah, it should be, right? Yeah.
But for the stock market, with Powell potentially putting another rate hike on, then they don't want to see us.
Not coming, dude. That's a rate hike's not coming. Come on.
Yeah, I don't think so either. And even if it did, I don't think it would matter to the market. The market knows that if there is one more, it's the last one.
Right.
And they're starting to look for cuts now.
Yeah.
This was an interesting one here too. This is the CPI, which I'll talk about here in a second, but this is from BLS as well. So this is AllItems CPI. You can see we had this big downtrend. This is peak inflation here, June of 22.
Yep.
And it's been trending down ever since then until, starting in June of this year, it's 2 times it started to trend up. I think this will come down a little bit in this next one. I think it'll come down a little bit more in the one after that.
For sure.
Now, the interesting thing is, this is from Bureau of Labor Statistics, by the way.
Mm-hmm.
Here's energy.
Yep.
right?
Now show shelter.
Yep, that's what I wanted to go to. Shelter.
There you
Let's
go.
do all items first and then do shelter.
Give me the energy.
Wait, let me take one off. Let me take that one off.
There you go.
There we go. There's shelter.
And now you know why it's a mathematical certainty that shelter is rolling over. For all you people that think I'm an idiot, guys, I can do math. It's math. It's rolling over for the next
I
several
mean,
months.
that's what charts are, basically, is math.
Yeah.
But it's even better than just math. It's visual.
Yep.
When you say rolling over, there's no better example of rolling over than that.
Exactly.
Right?
Yep.
So this is why I think next month CPI is going to come down even more.
Yeah, because last month shelter inflation started this rollover. It got more meaningful, but oil kind of muted the number.
That's right. And then this is wages. So there's a 3-month view of wages.
Mm-hmm.
Private is the red one.
Yep.
Right. So wages have been coming down.
Is that real or nominal? Sorry.
I think this is real.
Yeah, 1% seems like a real number.
Okay. Yeah, I think that's real wages. And, this goes back to 2006. So this is an annual 3-month percent change, but seasonally adjusted.
Okay.
All right, so let's take a look at, first of all, where are we? You are here for October. We've got CPI report coming on
Wednesday.
Wednesday.
Yeah, I think so.
9, 10, 11.
Maybe Thursday.
9, 10, 11. Yes, Thursday. PPI is Wednesday.
Okay.
10, 12. Yeah, it's on 10, 12. So anyway, CPI is right there. Here's the historical chart. You can see October is typically the first part is down. Mm-hmm. And then the second part towards the end of October, the market starts to rally into the end of the year. Mm-hmm. I'll talk about this more in the second session. Okay. But the CPI is the most critical thing we have to watch this week. I believe that if we get a good CPI number or even, down just a little bit, like the forecast says, mm-hmm. with everybody realizing that everything else is rolling over, it's going to be even better the next month. Right. I think that's the catalyst. I think the jobs number might have been actually the catalyst last Friday. Mm-hmm. But the CPI report, if that comes in tame or reasonably tame, then I think that's going to be the big catalyst to accelerate us into the end of the year.
Okay.
I'll talk about that more in the next session. Mm-hmm. So let's take a look at, let's see. Let's go to the website again and the chart section. And look at CPI first. So here's headline with core and PCE. So here's the 12-month window, right? I've already moved it 1 month forward. So this will be the next one next week. Right. And that means this is the one that drops off.
That was a 0.6, I think.
Something like that, yeah.
Yeah.
The two before that, I like looking at it visually because it really helps tell the story. The two before that, the last one was very small, and the one before that was actually negative. So that's where inflation looked like it was spiking again right there.
Yep.
Then we had a small one. So this one's a bit bigger. So that's why I think it's going to start to come down some. And then these are the actual numbers, and I'll update these after we get the report next week. So 3.7 was up from 3.3, 4.4 down from 4.7.
You usually create a commodity. Can you show me how oil looked last
week?
week?
Yeah, that's the next one I'm going to show you.
See, reading ahead.
Exactly. Yes, so the other chart is Fed rate hikes. So there's what I meant. Look at oil, gasoline, and commodities resource index.
Rolled over. Jeez.
Rolled over, but I mean, it started to roll. The CRB started to roll over in the middle of the month, And
Yeah.
gasoline definitely rolled over in the middle of the month, but
Yeah.
oil kept on going up until the
Okay.
end of the month. So this shaded area is what the CPI report is going to reflect.
Right.
It won't be until the next CPI report that will actually be able to register these huge drop-offs in
Yeah.
oil and gas.
But the other thing is they didn't really go up from the month before.
Well, yeah, they did.
Yeah, they did.
Yeah, they went up significantly from the month before.
So we may get a
Gasoline didn't. Gasoline was lower than the month before.
Okay.
But oil and the CRB index were higher.
Okay.
Lumber is, I might even take lumber out because
Yeah, it's boring now. It's full.
lumber was peaked back here, and even before inflation peaked.
Right.
So it was kind of interesting, but now lumber, I don't know. I could put a different one in there, maybe.
Mhm.
I'm not sure which one. I'll think about that. But at any rate, these, won't be reflected significantly. I think housing will, shelter will a little bit.
If you were going to put one other in, I might put copper. It's one of
Copper,
those.
yeah, I could do that. I could do copper. Yeah.
When you look at oil and copper, those are really kind of industrial commodities that really will talk about the growth. I would probably do copper.
Yeah, that's a good idea. I'll put copper in.
Okay.
All right, so that's what it looks like. Now here's the big downtrend right here. And we got two things. We got almost to this support level right here.
Look at that 200-day. Just
look
bounced.
at the 200. Look at the 200-day. Exactly. So this is what I'm going to talk about in the next session.
Can you just, I don't know, expand the screen so people can just see that pretty little bounce?
I will do even better. I will show you, going back to this comment right here from Stock Traders Almanac. Yeah. Remember their MACD buy signal, and they are pretty accurate year over year. They do a lot of research on historical trends. Mm-hmm. So this MACD buy crossover starts when October starts, and all three of these have to agree. Mm-hmm. Okay, so keep that in mind when I go back to the homepage on my website. And down here, I have 5 little charts: S&P, Dow, NASDAQ, Bitcoin, and the dollar right in the middle. Mm-hmm. So let's look at each of these. And what I did was I added that MACD signal to each of these 3. Oh. S&P, NASDAQ, and Dow. So we can now watch to see if the Stock Traders Almanac signal has fired. Oh, look at you. All right. Okay. So let's first look at S&P. So there's the little bounce right there. Yep. Here's the MACD signal. Ooh. And if you look to the right, there's a blow up of it. So that one has crossed. Yep. So 1 out of 3 is there. Okay. NASDAQ. That one crossed a while ago. Good. And you can see the bounce there even better. It's actually above the 21-day moving average, which is reversion to the mean. Right. And it hit right at this support level right here, which was the neckline for this head and shoulders. And if this doesn't, drop down below that, and if this keeps going up, in fact, then this head and shoulders is no longer valid. Okay. And I'll take these off if that happens. But look at that. It ended the day almost near the high. And now we've got 2 out of 3 for the MACD buy signal. Remember, this is a buy signal from Stock Traders Almanac that says this is when the end of your rally has begun. Okay. All right. So the only one left is the Dow. Uh-oh. Dow's not there yet. Darn it. So they have not yet issued that buy signal, but it's pretty close. Yeah. I mean, but potentially it could be next week. I mean, if CPI comes in good, it could start zooming. Yeah. Right after that. CPI comes in. Yeah. Okay. A week from now. But anybody, you don't even need a subscription to get to the homepage. Right. So anybody that wants to can watch those to see when they've crossed over. You'll know when the buy signal is. Just out of curiosity, here's Bitcoin. Bitcoin's been kind of trending higher after this major support level down here. 26, yeah, 26. Okay. In my
looks like it might break out.
It might break above this 200-day. Yeah.
Yeah.
My market bias chart, I'll show that in a second as well.
I remembered from last week. Yeah.
Yeah, this has a short-term buy, a short-term bull, medium-term bull, but it does not have a long-term bull yet. Yet. So the pink has to be above the blue for the short term. The blue has to be above the red for the medium term. And the red has to be above the gray for the long term.
Okay.
So 2 of the 3 have given signals. All right. So that is very interesting, right? I'll talk about that more in the next session. Let's see. Oh, you know what else? I want to show you on the charts. I want to share. There's a lot of things to cover, so I've got notes here. Fed rate, yield curve. Yield curve I want to show.
Oh man, that's collapsing. Everybody thought the low end would fall, but nope. The back end is rising. Gotcha.
Look at this.
Yep.
This is the chart I just created, just to give a really clear view of the yield curve.
And the pink line, that is what?
Pink line is the 2-year versus the 3-year. 3
so
month, I'm sorry. 2-year versus 3 month.
Got it.
But the main one is the 10 and 2.
Yes, got it.
But some people like to say, well, when the 2 and the 3 month cross, and
so did the 2 and the 3 month actually de-invert?
It did briefly, and then it went back down.
Okay.
Very briefly, just barely, and then it went back down.
But that's important. It's been negative for.
Yes, that's important because 2 things here. First of all, I've said this many times. This is one of my recession watch indicators.
Yep.
Once the yield curve uninverts, right here, it uninverted, and then it came back down briefly back here in 2007.
Right.
And then uninverted for good 6 months before the recession. So you could say 6 to 9 months, if you want to count this first one.
Right. Okay.
6 to 9 months before the recession. This one here went below very briefly, and we had a very small recession, but it was 5 months before it came back above zero. Not when the yield curve inverted. That's what everybody likes to talk about. Oh, the yield curve's inverted. That means we're having a recession.
No, yeah.
Well, yes. No, yes, that's true. It's been very reliable in that case. When the yield curve inverts, it's been very reliable that a recession occurs. But what they don't follow it up with is after it goes above zero, that's when it occurs. So 6 months here, 5 months here, we are rapidly approaching. Look at these 2 dots. This is a daily chart. No, this is a weekly chart, sorry. So each of these dots represent 1 week. Okay. So theoretically, if it keeps on that acceleration path, basically 2 weeks, it could uninvert. So let's call it.
It'll be really interesting. We obviously have a horrible tragedy going on in the Middle East.
Yes.
With a second war being declared. What will happen to rates, oil, dollar? Monday morning is going to be interesting.
Yes, it will. It'll be interesting to see what effect this has on my thesis that we'll talk about in the next session. But
okay, we'll leave it.
It could affect stocks this week briefly.
Oh,
usually when wars start, stocks go down.
Yeah,
but they don't stay there very long.
Yep, we'll see.
They usually bounce back very quickly. So we'll see. We'll see what happens. But yeah, there's the yield curve. So I put this on as a much easier to read chart.
Yeah, thank you.
But this is.
Yeah, I mean, it was over 100 basis points, folks. It's now 30.
Right. Yes.
Yeah.
This is on my charts page, yield curve 10 to 2s. This other one, yield curve, this is the bigger one that also shows the Fed rate hikes. This shows all of the criteria for a recession. Fed starts to cut rates. Yield curve goes back above zero. Unemployment rate spikes by 0.5%. All right. A lot of people say, well, come on, Fed starts cutting rates. That's what starts a recession. Come on. Well, that's what started that's happened before every single one.
Yeah.
This is it down here. Fed starts cutting. Yield curve inverts.
Right.
So both of these things have to happen before a recession's going to happen.
Right. Okay.
And the Fed could, they keep saying higher for longer.
Yeah.
But they were higher for longer back here in 2007 for a year.
Yeah.
At about the same place we are right now, a little bit lower. We're slightly higher, but roughly about the same place we are right now. They said, higher for longer. They kept it there for 12 months. The market kept going up.
Yep.
All right. So what else on my list? I think that's it. Fed rate hikes.
Very, very cool. This has been a lot of fun. Again, really the important day is CPI. I, like you, think it will become tame going forward, not only this month, but more next month. Shelter's rolling over. Oil has come off the boil.
Yeah.
I think there's a lot of signs. I suspect we might see CPI headline at 3% again this year. There's only a couple more reports, so we shall see. Dan, where can people find you?
It won't be this one, but the next one in November is going to be dramatically lower. I don't think it'll be 3 or less, but we could be back to 3.3 easily. Okay. And then the one in December could be back to 3.
Yeah, that's what I'm thinking. That's the one.
Yeah.
Very cool. All right. Where can people find you one more time? What's this awesome website called?
Just go to breakpointtrading.net.
.net. Yep.
There's the homepage. You can track the MACD buy signal for the end of your rally. We'll talk about that in just a minute. There's a bunch of testimonials here. This person here says it seems like each week you add something new, and I'm really looking forward to continuing to use it.
Yeah,
and that's true. Every week I do add something new, and I send a note out to my subscribers, my paid subscribers, listing all the new things that I just added.
It's fun to watch you grow, man. It's fun. Well, I look forward to our next conversation. Thanks, brother.
You bet. Take care.